Hey guys, this is Bruce Marshall with another crazy day, another update for you. This is Monday, September the 22nd, and we have a pretty crazy market today. As you can see, I've got the ES up here. Let me take this down right there. We have the ES up here, and this light gray was the overnight session, and we were kind of trailing off after Friday's close over here. And last week was a really big week because we had the Fed. Pull a calendar up here. We had the Fed on the 17th. They did their 25 basis point cut. I don't think anyone on the planet didn't know that that was going to happen. At the time we watched watched the bond market and watched different things, and there was about a 98% chance, 99% chance that they were going to cut 25 basis points, and they did, right? And then fast forward, we had option expiration. We had quad witching there on the 19th, which once a quarter that happens, and there was about 1.1 trillion dollars of call option that expired Friday, right, in the SPX, and about 90% of that is option volumes. About 90% of that was call options, which means that can tend to give a little support under the market. So we were thinking all that comes off, then Monday may be a down day, maybe a down draft or whatever, and we got just the opposite, straight back up. So, what happens this week? Well, we're already off to a good start here. You can see we do have a lot of Fed speak. We got tomorrow. Powell is speaking tomorrow morning. I believe it's at like 12:30 or something like that tomorrow, 12:35 tomorrow. Lots of Fed speak, but then on the 25th we have PCE, which is a very important data point for the Fed. That's one of the bigger ones, that they look at, and that will also have, that could be a big market moving event, right? Really could be. It's actually on Friday, PCE index, and core PCE. Sorry, it's not Thursday, it's Friday. But again, things still look very good here for the market overall. So let's look. So this is a 1-day chart. Let's go back to a 10-day chart here. This is on the ES. We'll just go from here, and as you can see, I mean, this is just nothing but net. Lower left to upper right. Looks great. Let's go out even further. Let's just go all the way out to a 1-year chart. Start on small time frames and go out larger time frames, right? So look at this. If we go to our just simple moving averages here, you can see here's a 20-day moving average right there, and we're way above it, and that doesn't normally last. Unfortunately, there's a 20-day, there's a 50-day, and as you can see, every time, so right here we touched the 20-day, and there was a pocket. See that air gap right there? We came back, touched it. Look how many times we've touched it. Got through it a little bit there, a little bit there. Another air gap, came back to it there. This time we came through it, and there's a 34 EMA that's in between here. That's what that is, hitting that. And now we're up again, up again here into the floating on air kind of thing. That's fine. It can go, as you can see right here, it can go for a long time like that. We can have another one, but it will come back down, or these will continue to go up, right? So this is the S&P, the ES/S&P/SPY, and that looks kind of crazy, right? So should we sell everything? No, not yet, not yet. Let me show you why. If we look at now this is some friends of mine over at Money Flow's site. They track all this stuff, so I just took a screenshot of it here for you. So notice, I'm just trying to get this thing a little more centered for you. So the yellow line is the market. This is the SPY, right? The green line here is oversold. The red line is overbought, right? Right now, we're not quite there, but we're getting pretty close to being in overbought territory. You see that red line right there at 80%? We're about 76% or so, right? But you can see in the background, this, again, this is the SPY, right? So when you hit that level, it doesn't necessarily mean that you're going to roll over. The SPY kept going for a pretty good while while we hit this, tagged, and came back down before, and then went down here before we ever started really rolling over. So this could continue to go up, and this kind of goes this way, or even down, and then they kind of meet over here somewhere, right? But this is, you know, where we are right now. We're getting kind of close to overbought. 80% is overbought. We're at 75.6. Even when we get overbought, it doesn't necessarily mean it, again, it's going to immediately roll over. So don't get too bearish here. One thing I wanted to show you, and if you've seen any of the videos I've done, I kind of quit talking about this because I had talked about it for so long. Is that if we look, so this is SPX, SPY is the same thing. If we go out here, actually let's do a 10-year. I'll do a 10-year weekly. Okay, so this is start of the year 2025, right? And you know, remember we thought we were going to have a Santa rally, and we rolled over, and then we rallied up, and then tariffs hit right there, sold off, and then went this way. And I did this exact same thing. I said, let's go back here to start of 2020. What happened there? That's COVID. Started the year up here, COVID happened. Boom. This is 1 year. What happened after that? It never, I mean, we had one little bitty kind of flush there, and then look at that. It kept going. This is, from that line to that line is a year. This thing could have a lot more upside. So this is 1 year from here to here. This is 2 years from there to there, right? Again, let's go back over here. And I've talked about this a lot over the last, really, I don't know, 6 months. But this is a cookie cutter pattern to continue. You know, potentially to continue. May not, may not. But the reason I think, one of the reasons, many reasons, but one of the reasons I think it'll continue is that we've got, of course, we've got multiple rate cuts coming. We know they're coming. Total of probably at least 75 basis points coming in. And some think this year, you know, during this calendar year, I think it might take a little bit longer. But that'll continue to help the market. We've got earnings look great. They're increasing. All the productivity increases from AI and all that kind of stuff are really, really helping. So don't count this market out. You know, it probably is got a lot more room to run. Now, that being said, the healthier thing for the market to do would be to pull back in a meaningful way to let us kind of get a new entry level in the market. People are getting a little more hesitant to buy up here at these levels, and I'm kind of the same way. I'm getting a little nervous myself. If that were to happen, I think we could come back down here all the way to that. That's a voodoo snow line. These prior lows from August. I think that would be reasonable. It's about 6. This is SPX 6360 ish. If we get down there, I don't know if we will or not, but you know, that's if we do, and the market does kind of decide to take a breather for a minute, which would be healthy for the market. I'm not pulling for a sell-off. I'm just saying the better thing to get us much higher is for us to pull back and give us some room to run. All right, real quick, let's go through this SPX. Let's look at, and we, you know, it's the ES, same thing. Right there's the ES. Let's compare it to the NASDAQ, same thing, all-time high. Big gap here up from the 20. Rut looks good, same thing. Small caps benefit from interest rate cuts. Keep an eye on this. This is going higher, I think, probably. The Dow, all-time high, gap up there. You know, everything's extended. Check this out. Gold, look at that. I mean, same thing. You know, new all-time high. I had AEM, one of the gold miners, and one of the things that I do from time to time, I do some covered calls, and I bought AEM, and I bought it way back over here. I bought it right there, and then I took a little heat on it, and I caught that dividend. And got this massive run up, and I got called out of it. Friday, Friday, this a couple days ago, right? And that's fine. I had a really nice trade, really nice win, all that kind of stuff, thinking that gold probably run is maybe in the short term had gotten a little frothy. But apparently not. It keeps going, right? So everything across the board looks good. It looks extended, of course. Again, here's NASDAQ. Everything looks extended. But these charts still look pretty constructive. Again, expect a little pullback here at some point. And, typically October, would be end of September, 1st of October would be a place or time frame to do that. We're not getting the seasonality from August and September weakness. We're not getting that this year. So far. So keep cash on hand. I'm not thinking black swan. There's too much backstop for this market with people want to buy the dip if it does pull back and more rate cuts coming down the road, So and I don't think that's coming, but a pullback, at least back here like to the 50 would be, easy. Right. So anyway, that's what I've got for you. If I can help you or have any questions, join me in the I run a room called the Bias Trading Room at Simpler Trading. Come see me there, or you can follow me on X at Trading Bruce, and I post updates and things there as well. Or join me in the main room. I'm in the main room at Simpler Trading all the time. So let me know if I can help. So thanks for your time, guys. I appreciate it, and I will talk to you guys at the next update. Thanks.
Without Simpler Trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency. It's one of the things that won me